open your bank app, your balance hasn't changed in months. Meanwhile, headlines scream about trillions in government debt. You might assume that's not my problem, but here's the uncomfortable truth. It already is. Debt doesn't just sit on a spreadsheet. It quietly becomes the money we use every day. And almost nobody notices. Let me show you how. Imagine a bank, not a giant one, just a regular bank. You walk in with $1,000, you deposit it. Most people think the bank stores it in a vault, but that's not how it works. The bank lends out $900 of your $1,000 to someone else. They take your dollars, they create a new $900 deposit in that borrower's account. Suddenly, the total deposits have increased. One deposit became two. That's how debt creates money. It's called fractional reserve banking. But don't get lost in the jargon. Think of it like a magic trick. Money appears from nowhere, backed by promises, not cash. You might be thinking, okay, it's just banks multiplying deposits, isn't it? Here's where it gets unsettling. Most of the money in modern economies isn't cash, it's debt. Every dollar circulating in your economy has a shadow, a promise someone, somewhere, owes that dollar back. Credit cards, mortgages, government bonds, every loan is a tiny money printing machine. The more debt is created, the more money exists. But it's fragile. If too many debts fail, the illusion collapses. The money isn't going to adjust the promises behind it. Think about this. In 2025, global debt hit over $300 trillion. That's nearly 4 times the world's total economic output. And yet, most people never stop to ask, who decides which debts actually turn into money, and why me? Let's zoom in on the government. When a government borrows, it issues bonds. Investors buy them. The bank buys them. The central bank buys them. Each purchase injects new money into the system. But unlike your savings account, it's not just sitting there. It fuels stock markets, real estate, and corporate loans. Here's the irony. The very system that promises stability debt, as money also creates inequality, the first people to receive new money can invest it. The last people see prices rise, wages lag, savings shrink. Now let's step back. You know that $1,000 deposit you made, it might have generated $900, then $810, then $729, a chain reaction of promises stretching across the economy. Every loan, every bond, every credit card is a ripple in a vast, invisible ocean of money. And yet, almost nobody notices. Most people think money comes from banks or governments. But it actually comes from debt being created and circulated, quietly, invisibly. And here's the uncomfortable part. This system depends on trust. Trust that borrowers pay back. Trust that banks don't fail. Trust that governments won't default. Break that trust, and the money doesn't vanish, it collapses. The stock market might soar. Headlines might celebrate, but the foundation is debt. Every gain, every rising price rests on the quiet multiplication of promises. So next time you see your account balance frozen or inflation ticking up, remember, your dollars are part of a vast, invisible machine. A machine where debt isn't a problem somewhere else. It's the engine of money itself. And that engine has no off switch. So ask yourself, when we create money out of promises, who really holds the keys? Because until we answer that, every dollar you earn is already borrowed from tomorrow.
Like and subscribe for more knowledge about finance.